India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, so I think it's customary to say thank God it's Friday. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Mangalam. Guys, hi, good morning.
Good morning. You know, I just thought I'll try this on TV and see whether it works or not. Guys, it's Friday.
Yes, it is.
All right. Yeah, exactly. So basically, earlier was a little confusion and then you gave a bit of a response. That's exactly what happened in the markets as well. First, day before yesterday, there was a bit of a reaction, and now there is a response. So yesterday, there was a bit of an uptick in the global markets.
Oh, last night was better.
Sea of green. So I think finally they made up their minds that yes, it's a happy cut, as Prashant called it, right?
It is a happy cut, but you know, I think yesterday the markets here, and I was out and was not looking, but I think yesterday was not a happy situation in the market, right? Mid caps and small caps, and I think Mangalam was mentioning this yesterday. There was a fair bit of pressure in the broader market. So. We'll get to it in just a bit, but let's just sort of take you through what you need to know, beginning, of course, with what last night threw up. So U.S. markets rebounded and rebounded in a good way. Labor market data came through, jobless claims essentially, which essentially were very low, which is good news. So labor market is strong in the U.S. That is the indication. So you add the strong labor market, which is the one point of contention for the U.S. Fed. I mean, they don't care about inflation. I mean, they care about inflation, but the big if there's one dominating driver, it's labor data, and that seemed to be pretty good. And then you throw in the 50 basis point rate cut. It's as I said yesterday as well, kind of a very happy situation, best whatever you want to put it. But it's strong economy and rates starting to come off. That's the backdrop. Now S&P went up 1.7. Nasdaq was up about 2.5% as well. So that's the US for you. Now, S&P 500 also, and this is just a sort of piece of information, hit its 39th all-time high of 2024. That's quite something. 39th all-time high of 2024. This is, I think, we've only had so many all-time highs in a year. Back in, I think, the last time was 2016. All right, dollar index, that was weakish, so about 1/3% lower, 100.69 is where we left off. It's basically bang in the support zone, which is between 100.42 and 100.79. It's a 20 weekly moving average. It's 2023 lows. So a break below this perhaps accelerates the downside for the dollar, which is good news for emerging market flows. Swiss franc and yen, these are essentially safe haven currencies. When there is a sort of drawdown, markets are looking nervous. They go up, they were down. Oil prices are back at about $75. So we're not looking at, it's slowly creeping back up, and it's added about $5 quickly in the last fortnight or so. And today we have the Bank of Japan, which will meet for decision, but no changes expected. We'll see what they say about what they'd like to do in the future. So guidance will be important. Nifty yesterday cooled off very significantly from the day's highest level. It's the same level which I've put out now for the last 10 days, 25,475 to 25,530. It's the end of the ending diagonal on the Nifty, and that is acting as a strong, looks like it's acting as a strong resistance. So in this zone, actually the high yesterday was 25,610 and change. So there was a kind of a throw over, and then the market sold off very steeply. So you need to cross this on the upside. Because, I mean, index has done very well. The bar goes up a little bit in terms of what it needs to do before we can sort of chart a course even higher. The Nifty must, on the downside, hold 25,120. It must not break it. It's, easy 300 points away from where we left off. Nifty Bank continues to outperform the Nifty. It nearly tested the all-time high. Support here comes in at the 40-hourly, 52,345. And in the way up, the high of 53,357. So yesterday, the Nifty Bank almost, I think it fell short by about 4 points, 5 points, almost went to the last all-time high, and then sort of pulled back a little bit. So let's hope, I mean, you're able to cross that sort of meaningfully, and then we look like, we do what the Nifty's done on the Nifty Bank as well. Some chatter, as always is, when you go back to the previous high and the market is not able to cross it in the first attempt of a double top, etc. But I think it's too early. You need to give it 2 or 3 more days because it's only now that the Nifty Bank has been able to come up to those levels. 35-point higher start is where the GIFT Nifty is indicating open, and lots of individual stocks where there'll be fair bit of action, which we will get to in a bit. Surabhi.
Yeah, absolutely. Lots of green. I mean, continuing the handover from Wall Street over to Asia is actually pretty good because most of the markets are up and about, and we've got 2 central bank decisions. One is done, the other is awaited, and that's Bank of Japan. And actually, we've got some inflation data out of Japan as well ahead of that announcement. Not that it'll have a bearing on, immediately today's decision, but that data is basically telling us that core inflation, core consumer inflation in Japan continues to inch higher. That's something that the Bank of Japan will be very, very mindful of because the numbers for August are at 2.8% versus 2.7% in the previous month. Nonetheless, I mean, today we're not expecting any moves on the hiking side from the BOJ. The anticipation is the BOJ will probably take that call at its October end meeting and maybe onwards in December. In China, no change. The loan prime rate in China has been left unchanged by the central bank over there as well. Let's look at some of the other key parameters. Now, if we talk about the market this week, then the interesting contrasts are very, very apparent. The Nifty is virtually unchanged. I mean, a gain of 0.2%. It's the Bank Nifty. That sector rotation has been very pronounced this week. And let's see if we get more of that today as well, because even yesterday in a topsy-turvy market, banks were really standing fine. Nifty Bank is up 2% already this week. And the correction in the broader market is very, very clear. Mid-cap index is down about 1% and the small cap down almost 2%. So very clear changing trends brought out by this week so far. Fund flows yesterday. We had a pretty big sell figure from the FII fraternity, 2,500 crores sold. Domestic institutions were a neutralizing factor as usual, buying up about 2,000 crores worth of stock in the cash market. I'm watching for 2 stocks in particular, both on regulatory action, one from RBI, one from SEBI. Now, there's good news for IIFL Finance. Remember, yesterday the stock was down 6-7%. There was a lot of chatter about whether there can be a ratings downgrade, etc. Well, suddenly, it's got a fresh lease of life because the RBI has restricted all the restrictions on the gold financing business, the gold loan business of IIFL Finance. So they can go ahead with disbursals, securitization, sale of loans, all of that. So that should be a huge relief. And this is coming after a whole 6 months. The ban came in effect in March. So good news over there. Axis Bank, this is a bit of a curveball coming through because SEBI yesterday said that Axis Capital will have to stop all its merchant banking activities in the debt market with immediate effect until further notice. It's a pretty complicated issue surrounding the placement of NCDs that Axis Capital had done with a hedge fund or, an outfit which is linked to hedge funds. We'll get you more details as we go along. But let's just see if there's any sentiment negative on Axis Bank because of this. So 2 interesting corporate developments that I'll watch out for. Mangalam, how are you looking at things?
Well, 2 things. One, when you guys were talking about the US markets, the broader markets in the US are doing so well. 7 days of a rally in Russell. And that, is totally different from what our markets were. Earlier, we saw our large caps underperform and our mid caps do extremely well. And in the US, everyone is talking about a very narrow rally. Out there now, the frontline indices are doing what they are. The broader markets are doing extremely well. I was looking at Russell having done 7 days of gains. And that last time that happened was in March 2021, a little before, the rate hike cycle began itself. That's one. And the second thing is Nike. I don't know whether you guys noticed or not. There was a development there where the current CEO has announced his retirement. And
the shares rallied. And I wondered why.
Because the earlier CEO who is coming back, Elliot Hill, is coming back from retirement. Usually in US, when CEOs come back from retirement, everyone goes back to what happened to Apple, when Steve Jobs came back again. And Nike has had it very bad in terms of its strategy and product line, etc. over the last couple of years. The shares have been much lower as well. So change of leadership, change of guard for
Mangalam tracks closely.
Very closely.
All the sneakerheads in our office led from the front by Mangalam.
The last CEO who came back was, before Steve Jobs, was Disney. Bob Iger.
Yes, Bob Iger came back.
3 years back.
And we also keep...
The return of the OGs.
The return of the... even in Starbucks, we have the founders keep coming back and there are a lot of leadership changes out there. So to that extent, it was important. But for the Indian market itself, like I said, first there was the reaction and then there's the response. And the response, the Wall Street showed that yesterday as well. A big gain is what we saw on all the frontline Wall Street indices. But apart from that, the GIFT Nifty indicating a positive start is a good thing. 3 things that, weren't so bad in our markets yesterday. The first thing, even though we went off the highs, we maintained levels. Nifty was above that 25,400 mark. The Nifty Bank still closed above that 53,000 mark itself. And the mid-cap index, while we did see a decline from the highs, there was an equal amount of recovery that we saw in the last hour as well, telling you that not all was very bad. Post-event, the other positive was that the India VIX, despite the volatilities that we saw in the market, the India VIX actually declined to sub-13 level, closer to 12.5 itself, after a big rally that we saw in the previous trading session itself. The other positive thing that happened was that the FIIs unwound some of their excesses. So if you look at it, there was a net sell of 924 crore in index futures by the FIIs. They unwound about 7,000 long contracts. They added about 7,000 short contracts as well. And as a result of which, their net long exposure, which stood at a hefty 69%, closer to 70%, has come off moderately. The important part, who bought the FII selling? It was the clients. Clients in HNIs who, know the near-term pulse of the market, after being net short, actually yesterday bought that dip. They added 17,000 long contracts as compared to just about 7,000 short contracts. So those are a couple of things that we'll be watching out for. The options range on the Nifty, 25,500 feels like a bit of a fulcrum for the next couple of trading sessions. 25,500 call has a premium of 150 rupees. 25,500 put has a premium of 150 rupees. Those who are selling the call and the put are playing for a broad range on the Nifty between 25,350 at the lower level to 25,650 at the upper level itself. The index, like we've been talking about, to watch out for will be the Nifty Bank, and that's largely because yesterday it went within kissing distance of its previous record high. Can it complete the loop or not is the big question, because it's been a rank outperformer this week and the previous week as well. This week, the Nifty Bank is up 2% at a time when the other indices are actually down 2.5 to 3% of the broader market level. Three stocks that I'm watching out for today. We pointed out yesterday the possibility of Chambal Fertilizers and SAIL getting into F&O ban, and they have gotten into F&O ban. And the other one is Balrampur Chini, which comes out of F&O ban. So those are a bunch of stocks that I'll be watching out for.
Okay, Mangalam, got it. We'll keep them on our radar. Thanks very much for that. Let's kick off the action then with the equity call of the morning. And this one's coming in from Lawrence Belanco of CLSA, who says that while there is still risk of further volatility for global markets heading into the US election, our base case remains for a continuation of the uptrend of the late 2022 lows into the year end. He says from a simple behavior aspect, the Nifty continues to respect supports provided by the 50 DMA post the election volatility back in June. He says while there are still signs of slowing upside momentum for the trend, he would give the benefit of doubt to the unfolding uptrend as long as the price action continues to respect supports provided by the rising 50 DMA, currently at the 24,760 level. Lawrence says a break of the 50 DMA would likely result in a test of the next chart support at 23,898 to about 23,900. But we're far from those support zones. The market continues to cruise along.
Absolutely. And, Lawrence, of course, widely followed as far as technicals are concerned. James Knightley is Chief International Economist at ING. He's joining us now to take some questions. James, good to have you with us here. Thank you very much for your time. So just a quick word, James, on markets and what they've done last night and what it means. Dollars sharply down. I mean, actually, just two things stand out. Sharp rebound in equities, dollars, which is now sharply lower, and oil, which has bounced back a little bit to 75, although I'm not sure anyone is paying attention there. What does it mean for this, what does this backdrop mean for EM equities, especially India, James?
Yeah, I think the Feds did a, they did a good job. I think it was a hawkish 50 basis point cut, if you can describe it as that. Basically giving a clear message that the Fed is very much in the soft landing camp. They think the underlying fundamentals are solid. It's just that the inflation backdrop is improving, and that allows them to provide a bit more insurance for the economy by moving policy rates back to more neutral levels, out of restrictive levels, just to ensure that nice ongoing growth story can continue. I think the Fed are trying to angle for a mid-1990s cycle where they've had policy in restrictive territory. They can take the foot off the brake a little bit just to give the economy a little bit more breathing space to continue, driving along quite nicely. And that positive, US backdrop in an environment where even Europe's looking okay. We had the Bank of England yesterday, not changing policy. We've had Brazil actually raising rates once more. So there's still some underlying confidence that the underpinnings of the global growth story is still looking pretty good. And for now, until something changes in that developed market story, in that US story, I think it should continue to provide a solid base really for risk sentiment in general, and of course emerging market equities and Indian equities too.
All right. So I guess, no discomfort from the US Federal Reserve. But James, hi, morning. I also want to get your views on the Bank of Japan. And that, for me, at least, is the more interesting one, right? Because if you look at data, even this morning, those inflation numbers continue to inch higher. Growth numbers have been inching higher, almost at 3% as per the last print. So how long do you think they can remain on hold? And if they do start raising, say in October or December, then what does that do to the whole carry situation?
Yeah, no, morning. It was an interesting one because, of course, remember what happened back in July. We had that interest rate rise, which caught the market a little bit off guard, that 15 basis point rate hike that came through. And, of course, what happened was the next day the Fed pivoted to become much more relaxed about inflation, focusing more on jobs. And then 2 days after that, we had that very soft US jobs number. And we saw US interest rate expectations plunge as the yen soared. And there was concerns at the time about some financial market instability potentially stemming or coming from this big dollar-yen move that could potentially have hurt some investors, some hedge funds, and there was a little bit of anxiety about what that may mean. So I think that caution, it continues to play a little bit in the Bank of Japan's mind. You know, they've seen some really big moves in dollar-yen from the low, sort of 160s to the low 140s. And that, of course, does help at the margin tighten monetary conditions. It does act as a bit of a brake on inflation as well. So that's a good news story. So we're of the camp that we'll probably get the Bank of Japan holding today. And we are looking for them to hike, but perhaps it may not come until December this time around.
Right. You know, the obvious question then is with the money, which is now a little more cheaper than what it was before the 50 basis points rate cut, where does it find its way? In what asset classes, what geographies? What are your expectations? Where does the incremental money go to?
Well, the US is still awash with liquidity. We've still got banks putting money back in the Fed deposit at the Federal Reserve. We've still got trillions of dollars sloshing around in money market funds as well. So, there is the potential for these funds to move, if, as we expect interest rates to continue falling, that money may well seek a new home. But of course, it also depends on the macro backdrop as well. And at the moment, everyone's sort of really buying into this narrative that the US is in a soft landing, the US can move policy back to neutral and everything's going to be fine. Well, the jobs market is a clear worry. The Fed did cut 50 basis points. They think, that they do perhaps need to move to neutral quite quickly to ensure that they do get that soft landing. It's not guaranteed. And I think, we are going to be closely following these jobs numbers. So for now, there's very few firings going on, as we saw with the jobless claims numbers. But the hiring story has really weakened dramatically. And the quality of the jobs that the US is adding has deteriorated as well. It's much more part-time, it's much more low-paid jobs. So there is a general sense that the economy is cooling, and for now the assumption is it's going to cool and stabilize. But you never know, it could carry on just a little bit further.
Okay, all right, James, we'll leave it on that note for this morning. Thank you so much for joining in. Have a good Friday and a good weekend, and we look forward to connecting again soon. Well, with that, we have to quickly look at all the stock-specific action that we're going to track today. And, in our top 10 segment, we'll be looking at stocks like IIFL Finance, Reliance Infra, NTPC, Indostar, IDFC First Bank, Phoenix Mills, EMS, and Power Grid, all those on the back of positive news flow. Vedanta and KEC International have slightly negative cues around them. We'll tell you more about all of those stocks in just a bit after a quick break. Welcome back. Well, as promised, it's time to look at a lot of individual stocks that could be catching the limelight today. And our team is standing by with the CNBC-TV18 list of top stocks to watch. Let's start first with Ritu. Because IIFL Finance has made all the headlines and for the right reasons this time around. Ritu, morning. So relief coming through?
That's right, Surabhi. Good morning. Big relief actually for IIFL Finance because RBI has lifted restrictions on its gold loan business effective yesterday, and that means the company can now resume sanctioning, dispersal, assignment, securitization of gold loans after what has been a 6-month ban. Now remember, RBI had placed restrictions on them on the 4th of March because of material supervisory concerns that included, deviations in certifying the purity of gold, breaches in loan-to-value ratio, cash dispersals and collections in excess of the limit allowed. And the impact of that ban has been significant. Their gold loan AUM more than halved from about 26,000 crores in March to about 12,162 crores by August. The share of gold loans in their consolidated AUM that dropped from 32% before the RBI action to 21% as of the first quarter, and they lost 1 million customer accounts that were closed during this period. There were concerns that there could be layoffs as well, with about 12,000 employees across their gold loan branches. But this lifting of restrictions, of course, removes the key overhang on the company and the stock as well.
Right, we are stock to watch out for on the way up. Thank you so much for that update, Ritu. Let's go across to Vivek now. He has some more updates coming in on Reliance Infra and also Vedanta and NTPC. Vivek.
Well, that's right. Some important updates coming in as far as Reliance Infra is concerned. Number one, the company has announced a fundraise. Fundraise is going to be via 2 routes. Number one is a preferential issue, and the other fundraise is going to be via the QIP route. Now, talking about the preferential issue, fundraise of close to 3,015 crore, and the promoter entity participating in this fund issue is going to be Rise Infinity Private Limited. Non-promoter entities include Florenti Innovation, that is led by Matthew Syriac, and also Fortune Financials as well as Equity Services. Now, coming to the QIP fund raise, the company is looking to raise close to 3,000 crore via the QIP route. Talking about Vedanta, again, some debt that the company is taking up. Now, this time it's the parent entity, that is VRL Resources, that has raised close to 900 million debt. This particular debt has been taken from Citicorp International. Citicorp is acting as the trustee, and the issuers of the debt are VRL, Twinstar as well as Welter, all three which are promoter entities of the listed entity, that is Vedanta. Now, coming to NTPC, in line with the very significant capex plans that the company has outlined for FY25, the board of the company has gone ahead and approved 2 investment proposals. Number one, 800 megawatt power plant at Odisha at a capex of a little over 11,100 crore, and a Chhattisgarh power plant again of 800 megawatt, and the size of this particular, or the capex for this particular plant, will be close to 9,800 crore.
All right, Vivek, thank you very much for that. We'll keep an eye out on all those names. The Bank of Japan decision is at the bottom of the screen. They've, as expected, held rates, nothing, maintained short-term interest rates at 0.25%. So that's the Bank of Japan meeting. The dollar-yen is absolutely stable, nothing at all. So it's essentially where it was at about 142 early August. When at that level markets globally panicked. But of course, the yen rallied from 162 to about 142, and since it's been in this 140 to 145 zones. Usually there's a press conference later, and guidance, etc. will be important, so we'll get back to this in a bit. Well, let's go back to Ritu now. Indostar and IDFC First Bank will also be in focus. Ritu, tell us more.
Well, you have NBFC Indostar Capital selling its subsidiary Indostar Home Finance to a private equity player, EQT, for about 1750 crore rupees on a fully diluted basis. This deal is still pending, all the approvals, including from the Reserve Bank of India, consent from lenders and shareholders. Once it is completed, it will see the private equity player EQT invest about 500 crores into Indostar Home Finance. The capital is expected to help Indostar grow its primary sectors, which is vehicle finance and small business loans. Keep in mind, as of the end of the first quarter, Indostar Home Finance had 121 branches across 8 states. Their average ticket size is about 9 lakh rupees, and the assets under management were about 2,395 crore rupees. Now, on to IDFC First Bank, where the Reserve Bank of India has approved the reappointment of their MD and CEO V. Vaidyanathan for a 3-year period effective December 2024, that is until December of 2027. Earlier in April, the board had approved his reappointment for this 3-year tenure after his current term ends in December this year. which has now received the regulator's nod. He's been the bank CEO since December 2018 following the merger of Capital First and IDFC Bank, and this reappointment for the entirety of the 3-year term that was sought by the bank is a positive and ensures leadership continuity.
Okay, absolutely. So that stock expected to open out in green on the back of that development. Ritu, thanks for it. Let's head to Sonal now. Sonal, you're watching out for Phoenix Mills. What's the news here?
Well, Phoenix Mills, via its subsidiary, has made inroads in Punjab. They've gone ahead and they have been declared as the lowest bidder for 2 plots in Mohali in Punjab. And the total land area is around 13.14 acres. This will be used for commercial development only. And the bid value for the combined, for both the plots is around 891 crore rupees. The company says they intend to develop a retail-led mixed-use development on this land parcel. So one more step ahead in the expansion plans that the company has been talking about.
Sonal, thank you very much for that. More stocks with news flow. Vivek, back to you.
Well, that's right. Quite a lot on the plate today. First up is EMS Limited. Now, 2 separate pieces of news here, both important. Number one, the company as well as its JV partner has emerged as the lowest bidder. This is for a tender that was floated by Kolkata Municipal Corporation, and this tender pertains to a pollution abatement work in the river Adi Ganga in Kolkata. Contract size is quite significant, 680 crore, where EMS share is close to 74%. Along with that, yesterday the company also announced a fundraise via the QIP route. The company is looking to raise close to 400 crore. KEC International, a slight setback coming in terms of a rating downgrade from rating agency CARE. Various bank facilities of the company have been downgraded by a notch. Long-term bank facilities downgraded by CARE to CARE A+ stable from earlier CARE AA negative. Now, the downgrade is mainly on the back of lower than envisaged recovery as far as gross current assets is concerned, continued reliance on working capital borrowings as well as the leveraged capital structure. Lastly, again, keeping an eye out on Power Grid as well. One more order win or one more lowest bid as far as Power Grid is concerned. Now, this company has emerged as a successful bidder under the tariff-based competitive bidding. Now, this is for a transmission system to be developed from Khavda in Gujarat, and the project includes establishment of both a new substation as well as new transmission lines, which will be done in the state of Gujarat.
Right, Vivek, thanks a lot for that, and we thank the entire team for all the stocks which they just mentioned will be in the news. In case you missed it, let's recap that for you. Stocks with positive news: IIFL Finance, Reliance Infra, NTPC, Indostar, IDFC, First Bank, Phoenix Mills, EMS and Power Grid. Well, stocks with negative news flows today: Vedanta and KEC International. All right, let's talk about the commodity space now. Manisha Gupta joins in with a roundup of all the action from the commodity market. Manisha, what stood out was the profit taking in gold.
Well, yes, and even as it's off its all-time highs, but trading very close to that. So $2,600 an ounce has been an all-time high, and we are trading at around $25.80 at this point in time. Well, the geopolitical tensions, decline in dollar index, and the fact that the markets are looking at a slowdown in Europe and US clearly have been supportive. Add to that the fact that the U.S. presidential elections in the month of November bring in a lot of uncertainty, and we have seen a lot of physical gold buying in the Western world, also adding premium to prices. Within metals, a couple of metals that stand out is steel trading at a 3-week highs, and the copper price is now trading at a 2-month highs. There are concerns from Zambia mines, and it also has to do with a stronger demand that we also seem to be picking up from Asia that is supporting copper there. Sugar is one thing that I would definitely want to mention, because this week has seen very strong gains into this commodity. We are up by 6% for sugar. It's trading at a 2-month highs at almost 22 cents. International Sugar Organization says that 2024-25 would be a third straight year that you could be looking at a global deficit, and that is supportive.
Okay, all right, got it. Manisha, thank you very much for that. We'll watch out for how some of these commodities sort of play up through the day. Take a break right now. Back in a moment, we'll have Deepan Mehta joining in, and he will, of course, give us some fundamental ideas to look at today.
Welcome back. You're watching us here on Bazaar Morning Call. The GIFT Nifty indicating a positive start for our markets itself. Though the premium has compressed a little bit from 50 points to about 30 points. But who's to say where it's likely to go in the second half of trade? Dipan Mehta, the director at Elixir Equities, joins us now. Dipan, we were very close to hitting a fresh all-time high for the banking stocks yesterday. Today, we start with some positive news, at least on IIFL Finance. Your thoughts on the NBFC space and IIFL in particular?
Yeah, Mangalam, good morning and thank you for having me on your show. I think the entire NBFC space, excluding outliers like Bajaj Housing, are perhaps the cheapest stocks in the entire universe. And some of the microfinance companies like Credit Access, Pandana Spurti, even companies like Ujjivan Small Finance Bank are trading at single-digit type of P multiple or low double-digit, which is surprising in a market like this, where the average ME multiples are 40-50 times or so. So I think that the NBFC bank has not been a favored space. They have been underperforming. But as we are seeing the churn in the sector taking place, I'm pretty certain that a few months down the line, banks and NBFCs may come back into focus. Just a trigger is needed. And investors, I think, should be overweight on the entire sector. Because at the end of the day, it is a growth sector and considerable runway.
Okay, got that. Dipan, hi, happy Friday to you. So gold financiers, right? Never a dull day. If you're in the gold financing business, either gold is shooting higher or the regulator's doing something. Now we have, IIFL Finance finally coming out with good news. Tell us what you think that'll mean for that one stock and also the others in the market, right? Because we've seen the rapid growth for the others, Muthoot, Manappuram. They've only been gaining market share because some of these names like IIFL Finance have been out of the market. What do you think of the business? And if you were to pick a stock, a gold financing stock, which one would it be?
Yeah, Shubhi, good morning. I think it's great news for IIFL Finance because they are amongst the most aggressive lenders in the gold financing space, and they had clearly carved out a very strong market share for themselves at the expense of some of the other gold finance companies. So, and valuation-wise also it is attractive. At the same time, it has got other lending products as well, which offer some amount of balance. So when you compare the entire spectrum, I'd go with IIFL Finance. It's been an aggressive player. And I think there's a scope for the PE to get re-rated upwards now that this regulatory overhang is over and done with. I think that's where investors should focus on.
I remember looking at Deepan, hi, morning. I remember looking at IIFL and where it trades at. It trades at one-time FY26 book. So yeah, it's kind of bombed out in that sense. But as you say, it should see a big relief rally. That is the financial services and NBFC space. What about the telecom space and especially Indus Tower, Deepan? I heard a lot of interest around this name, even as it was down 9-10%. So you can argue and say, well, it's almost a Bharti company now. I don't think if you look at actual estimates for Indus Tower, nobody was factoring in this AGR bid. Actually, even for telecom companies, this was like the upside bull case. Stock went up because of this, but it's not in the estimate. So it's not as if you'll see sharp earnings cut because of the disappointment yesterday. Indus Tower specifically, if you have a view.
Yeah, good morning, Prashant. See, the issue with Indus Towers is that if you compare globally with some of the other tower companies, it is available at reasonably attractive valuations. But I think that, Vodafone, certainly that's the big question mark. And this, the fact that they lost the curative plea will put more pressure on Vodafone. So I'd get a bit cautious on Indus Towers, maybe take some money off the table. First, the disclosure, we and our clients are invested in it. And this is not a good development. And if you see quarter after quarter, Indus Towers, the earnings have stagnated. And I don't see any major, upside in terms of growth for Indus Towers. End of the day, I think it's reached sort of its level of potential. And you could see that this business becoming pretty much mature. So I would just be cautious on Indus Towers at this point.
Deepan, the data is interesting, right? If you look at a lot of chatter around this, PSUs. In the last 2 months, the BSE PSU index, which basically is 60 stocks, is down 11%. And in the last 2 months, in these 60 stocks, only 2 are higher and 40 are down, between 10 to 35%. Just your thoughts on what happens here. I'm talking about everything here: railway, defense, banks, everything. But PSU.
Yeah, I think, Prashant, it's a very good development because a lot of thought was getting built in the PSUs, and we have been expecting a correction across the market, but it's not happening. It's happening sector by sector, so it's perfectly fine. I think that some of the defense stocks and the railway stocks are still expensive, but maybe another 10-15% correction and a good quarter, September quarter, may see their valuations from peak level, I'm talking peak level, P multiples, to maybe go down 40-50%. And then that may make a good entry point because end of the day, a lot of the engineering or the capital goods related PSU, be it in railways or in defense, they're sitting on massive order book positions. So there's good earnings visibility. So I'm keeping my eyes trained on the entire PSU engineering capital goods space. I think that further correction may yield very good winners.
All right, take that point. Stay on, Dipan. We'll come to you with more, stock talk as well. Let's go across to Anuj now, who joins in for a quick trade setup this Friday. Anuj, how are you feeling?
I'm good in my Mangalam. It's Friday, so normally always cheerful. How are you?
Friday.
I think it's the same feeling on this side of the table as well.
Yeah, I mean it's okay. I mean, look, that's just on the lighter side, of course. Now, coming to the setup, this is one thing that I've been talking about for some time now, that the Bank Nifty is looking one shade stronger than the Nifty. And I'll just put it in numbers. In September so far, the Bank Nifty is up 3.3%. And the Nifty is up only 0.7%. The reason for that is the Nifty IT has started to fall. It's now down about 2%. The only risk which emerged yesterday was that did the Bank Nifty make a double top? Yesterday's high was 53,353. The all-time high was 53,357. So for practical purposes, you hit all-time high, but still, on record, you still didn't hit an all-time high. Anyway, yesterday was the third highest close of the Bank Nifty, and only the third time that the Bank Nifty has closed above 53,000. So in that sense, the close was actually quite good. And normally, first attempt at an all-time high is rejected. The second attempt is successful. Let's see if we make another attempt at that all-time high. And quickly now, why is the Bank Nifty rallying all of a sudden? I think, you were just discussing with Deepan how PSUs have started to underperform. Defense has started to underperform. I think market's focus over the last 1 month all of a sudden has moved to undervalued pocket. And in the market, the only space which is undervalued is large private sector banks. Whether it's HDFC Bank, Kotak, Axis, they're all trading below their mean valuations or median valuations. ICICI Bank, yes, is fairly valued, but then that's also not done a lot over the last 1 year. That's also underperformed the market. So that's on the Bank Nifty. Coming to Nifty levels now, first resistance is 25,500 to 25,550. Then the bigger resistance is 25,600 to 25,650. Support comes in at 25,350 to 25,400, and then 25,150 to 25,250. For the quote of the day, since it's Friday and since it's cinema day, I'm referring to, and also, keep in mind the Shawshank Redemption, perhaps the greatest movie of all time, completes 30 years next month. And of course, we have one of the greatest actors ever, Morgan Freeman. That's the quote that I apply in my life as well. That's on screen for you.
You want to say that in Morgan Freeman's voice?
You are good at that, Mangalam. You can do that.
That's a beautiful one, and of course one of my favorite actors, and I think all of our actors. Somehow he's always played. I think he's played God a few times over in many.
Bruce Almighty. I forget the movie.
Bruce Almighty.
Bruce Almighty.
Bruce Almighty.
So there was one of this. There was a content piece where he was called to one of these talk shows, and they just played a random video of a man walking down the street and asked him to do the voiceover on that. And that itself sounded like gold.
He's such a great actor. Once he played Nelson Mandela. And when Nelson Mandela died, a lot of publications mistakenly put his picture.
Absolutely. In the same way, something comes to my mind. Asim Dhru, who is the founder of SBFC, Small Business Finance, he did a podcast recently, and he was asked something about, philosophical. He said, he quoted Osho, of all people, and he said, it's very difficult to stay with yourself for 10 minutes, doing nothing, just with yourself for 10 minutes without picking up the phone or doing anything. And that company you want to impose on others. It's kind of the same line of thought, which is stillness and sort of, being in the moment. And
it's absolutely so relevant for anyone who's either in media or in markets, and we are in both. So we need to sort of really keep this in mind.
Anytime, I'm going through any kind of depression, I watch Shawshank Redemption. And I think it's one movie which will really lift your hopes by the end of it. So if you ever feel low, watch that movie.
Absolutely. The triumph of the human spirit, the greatness that we are all capable of. All right, so that's a dose of optimism and inspiration this Friday. Getting back to markets now. In an exclusive conversation with CNBC-TV18 yesterday, Christopher Wood, global equity head of equity, global equity strategy at Jefferies, said that FIIs are marginally underweight in India, despite India being the best long-term equity story. But any major fall in Indian equities will be viewed by FIIs as an opportunity to buy. Listen in.
I'm genuinely astonished by the resilience to the capital gains increase, which is quite material, most particularly as a week before I met many domestic institutional investors and they were not expecting the capital rate gains tax increase. So I find that...
and many of them were very vocal that markets will be hurt.
Yes, I would have been too, so we've all been completely wrong. So the only explanation is that the domestic households who are investing through these monthly installment plans have become convinced, in my view correctly, that India is a good long-term equity story and don't want to be scared out of the market. That's the only... And the big story of India this year is these domestic flows.
Yeah. But what about foreign flows? You said that easing cycle is great for EMs. India is an emerging market. Foreigners have stayed away. I mean,
but on a relative basis, if you're investing, if you're an EM fund manager, after this 50 basis point rate cut yesterday, the markets you're going to want to add positions to are places like Brazil, which have 11% nominal rates, 5-6% real rates, so huge potential to cut rates. Markets in Southeast Asia, like Indonesia, Philippines, which are traditionally very sensitive to lower US rates, weaker US dollar. So India is not the obvious place to put your money in today because, one, it's expensive, and two, the RBI is in no hurry to slash rates.
But haven't, I mean, you've been at the conference, you've been speaking with a lot of foreign investors who are here. What's the sense you get about India? Yeah, it's expensive, but it's been expensive. You could have made the same argument 3 months, 6 months, a year ago.
The people who are, obviously the people here are already invested.
Right.
And so their issue, they're not too hung up on the valuation. I mean, they're all concerned about the valuation.
No, we're talking about incremental flows into the Indian market. I mean, what's the sense you get on that? I mean,
well, my sense is, yes, the problem for the foreign fund managers as a whole is that they are underweight. Based on our latest data, based on the top 30 global emerging market equity funds, they're now marginally underweight, which is not where they want to be, because most of them would agree with me that this is the best long-term story. But they're underweight. They've become underweight from a de facto standpoint. One, because they've been reluctant to pour money in because of the high valuations. Two, because this is a very important point, the neutral benchmark weighting of India has just gone up a lot, which has made them become underweight by market performance. But there's an additional issue. There are two sectors where the two sectors where foreigners have traditionally most invested in India have ironically been underperforming, i.e. IT services and banks. So in the last year, many foreign investors, particularly value-orientated investors, would have gone into the banks for the first time because they came within their valuation range. But you know, they're not the hot areas of the market. The hot areas of the market in India have been areas like industrials, infrastructure, real estate, energy, defense. These are the areas which have been driving the market. That's not the area traditional emerging market investors have been investing in.
So you don't think that foreign investors are going to come back to India in a big way?
Not in the immediate term, but the good news about this is the really positive point to take away is any major correction in India, like say 10%, in my view, will be viewed by foreigners as the opportunity they've been waiting for to add.
Are you still expecting a 10% correction?
No, I'm not. I'm just saying that's...
someone said 5 is the new 10 and maybe 2 is the new 5.
No, in my view, I've got a greed and fair long in the India portfolio. I'm not going that defensive in it.
Okay.
So, because the point is I can afford a correction. I've got very good performance. But my portfolio is heavily in energy, real estate, capex plays, but I have got the bank, so that's, I suppose, the conservative part of my portfolio.
Okay.
But the real issue for foreigners I think the more foreigners know about India, the more specialized they are in the market, the more relaxed they are on the valuations. It's just the generalists are the more concerned. And global investors, as opposed to global emerging market investors, barely own Indian equities at all.
So
I'm talking about global funds.
Right. Not EM funds, but global funds.
They barely own India at all.
At all?
Yeah, literally. They don't own India.
So it's a strange kind of a position, right? I mean, because you're saying it's a best long-term
so
story.
Many global investors will agree that India is now the best story, but there's a practical issue that if you only invest in India via ADRs, you have extremely limited choices. Because of the lack of ADRs quoted offshore. Unlike in China, there are many ADRs. And the second practical issue, if you want to invest in India in a sort of more real manner, you have to get FII approval. And that is a regulatory obstacle, right? That requires a real commitment. So most global funds have not got FII status.
Is that such a big issue? I mean,
yes, that's an issue. Don't underestimate that.
Yeah.
So a big fund management company could have their global emerging market fund with FII status, but their global fund may not have it. And then this capex increase, or capital gains tax, will now become another. Will now put them off.
You know, in your note, I think the last but one note, you did mention that you put in that capital gains, and you said, well, that worries you.
Now, personally, I don't believe in capital gains taxes on equities because people have already earned the money and they're risking. They should be encouraged to invest in equities. Now, obviously, you can deduct the money you lose, but that's just a philosophical point. So, obviously, the government's raising.
No, but did you mean that in the context of where India is in terms of the political?
Well, no, that is an issue because in most Asian markets, you do not pay capital gains tax.
Welcome back. You're watching us here on Bazaar Morning Call. After some philosophical talks here, talking about equanimity and all of that and stuff, good time to get to the basics and talk about what to buy, what to sell. Mitesh Thakkar and Avni Bhatt now join in for the Today Trade on the indices and individual stocks. Mitesh, you go first.
Good morning, ma'am. On the index, it's been a consolidative kind of a phase. And I've said that 25,300 to 80 would be the first support pivot. In fact, the day before we went there, I think as long as that is holding out, I think it remains a buy and declines kind of market on the indices. The bank nifty is outperforming, so that's very clearly that's where the trade is. It's now very close to the earlier highs of 53,150, 53,200 zones. I think once we get an intraday closing about that, even on a 2-hour chart, I think we could see this continuation of this rally to about 53,500. This also comes on the back that the weightages in the bank nifty, which is Kotak Bank, HDFC Bank, those charts look very good, and therefore I think they might do well in the next few days as well.
Okay, got it. Thanks for that, Mitesh. Let's quickly get in a call from Avni as well. Avni, morning. So considering that the global cues are very, very supportive, would you look at a long trade on the indices, either Nifty or Bank Nifty?
Good morning, and a very good morning to all the viewers as well. For me, Nifty around 25,500 is a very crucial resistance zone. Yesterday it gave a swing high above that, but closed below it. So I would wait for a closing above 25,500, after which we will see a very clean move up to around 25,800 and closer to 26,000 also. But as long as it closes below 25,500, that's the area which I would avoid. And if at all we do not see any decline and it remains about 25,550 on intraday basis for at least 15 to 20 minutes, then that would be another trigger point to go long. And the target, as I told you, it would be 25,800 to 26,000 on the upside. Supports are very well placed at 25,300 to 350 area. So that's the area. In case if we see some dips, 25,300 to 350 area would be a buying zone. And similarly on Bank Nifty, now how long will Nifty enjoy the newer highs and Bank Nifty will remain sluggish? So now it's the turn of Bank Nifty to give a good move on the upside. 53,350 is the level, closing level, which we should watch out for. Once that happens, we'll see a very clean move up to 54,000. The bottom line is that the overall uptrend is intact, and some bit of consolidation, some bit of volatile swings, and then we should be seeing a clean move in coming days.
All right, we take that. Mitesh, your stock picks?
Yeah. I have a buy on Kotak Bank with a stop at 1852 for targets of 1920. AU Bank and Finance, I think that's also doing very well. Had a flash breakout yesterday. Could head towards 775, and it's a buy with a stop at 740. A buy on Oberoi Realty with a stop below 1820 for targets of 1890, and one sell call, that's HCL Tech. Keep a stop about 1751. Look for mild declines to about 1700.
Okay, and Avni, your stock calls for the day?
So my first stock pick would be Vedanta Limited. So Vedanta Limited gave a fantastic recovery yesterday. It had given a breakout above 435 earlier, and in last couple of days, it has retraced back to those support levels. But yesterday by closing, it gave a fantastic recovery on good volumes and futures open interest addition also. So the stock is ripe to retest its recent highs. We would go long on this particular stock for a target of 480 and 495 on the upside, keeping a stop loss of 436. The second stock would be IndusInd Bank. Breakout above the downward sloping channel on good volumes and long addition in futures. And it is sustaining above the 50-week exponential moving average on the daily charts. So this again would be a buy call for a target of 1550 to 1575. And stop loss can be maintained at 1445. The third stock would be SBI Life. So it's already in an uptrend, but some bit of cool off and consolidation has been seen in last couple of days. And the stock is once again on a recovery mode. So the uptrend should resume soon. So this is an anticipatory call. We are expecting the uptrend to resume. It closed at around 1840 yesterday. One can buy for a target of 1940 and keep a stop loss of 1790.
All right, Avni, thank you for joining. We take a short break, come back, we'll have the pre-opening rates, and also with us will be Nikhil Nigania of Bernstein as NTPC Green Energy files for its IPO.
Well, less than 15 minutes to go before we hit the opening bell. Let's actually get you some futures and options trading ideas as well now. We have our next guest joining in for that. Soni Patnaik is with us from JM Financial. Soni, good morning. So what trades are you going with?
Good morning, everyone. Thank you so much for having me on your show. So since the markets are quite bullish and the upside is still intact, we'll go with two buy calls for the day. The first would be from the realty space, Oberoi Realty, which has given a good, strong short covering move yesterday and a breakout on intraday charts yesterday. So one can buy Oberoi Realty futures in the range of 1840 to any small declines up to 1830, keeping a stop loss of 1810 and a target of 1900 and a second target of 1940 can be seen. The second pick comes in Voltas, which has given a very strong option chain breakout yesterday above 1900. So one can buy in Voltas futures at 1917 to 1915, keeping a stop loss of 1895 and a target of 1950, 1980 also can be seen.
Right, Voltas and Oberoi Realty. Thank you for that, Soni. Let's go back to Deepan. Deepan, your thoughts on the real estate space? I mean, you know, a lot has happened already. And the street believes that a lot is priced in. At these levels, what should one do? Is a fresh entry warranted, or the ones who are holding book profits?
And I saw Chris Wood's interview, and I think real estate is one sector he wants to get overweight in a correction. So I think I'll go with that flow of thought. That it's an interesting sector. It's in a multi-year bull market, but stock prices have rallied significantly over there, and the risk return doesn't favor you. So maybe in a correction, as we have seen in the PSUs, I think if there's a correction, deeper correction in real estate stocks, I would go with the winners, especially companies like Macrotech Developers and Oberoi Realty are on our market watch list.
Right.
Okay, all right, Deepan, we'll leave it on that note then. Thank you very much for joining in. You have a great Friday, and we'll touch base again soon. Well, Well, with that, let's put the spotlight now on NTPC. The stock was the best performer on the Nifty actually yesterday, and it retained all its gains even when a lot of other PSU stocks were under pressure. And that is because the news is now official. NTPC's subsidiary, NTPC Green Energy, has filed a DRHP for an IPO. And of course, the market's getting excited about the possible value unlocking that will take place. Now, Bernstein believes that the market might be willing to give a premium to NTPC's renewable business. Let's wrap our head around this. Nikhil Nigania, Director, Senior Analyst at Bernstein, is with us. Nikhil, great to have you on. Good morning. So let's start with exactly that. This is a much expected, anticipated and awaited event. Now, what is the potential value that you have ascribed to the renewables business at NTPC?
Yeah, so you're right. It's a much awaited event. It's been in the news for some time now. But I would just like to caveat that there are two schools of thought here. The first one is a fundamental view. So if you ask us, is it the ideal setup to list the renewables business separately? We would slightly disagree. We think right now the cash from the thermal business can fund all the capex for the renewable business. So listing it separately might make that difficult. And the renewable entity might need to keep doing some more fundraisers in the future for all the capex it has planned. And the second school of thought, as you said, is the value unlocking bit. There's a lot of interest in the renewable story right now. So given the blockbuster IPOs we have seen in the renewable space over the last 1 year, there could be good interest in this stock as well. On the valuation front, if you look at peer multiples, private power players are trading at 4 to 7 times book multiple right now. So there is a lot of excitement, and remains to be seen what valuation this could get.
Yeah, a great time for to list, generally speaking, right? I mean, I think that vibes with the general sentiment of kal ho na ho. So I think that's what a lot of people are going with. Nikhil, good to have you with us here. Good morning. Just explain that point a little bit more in terms of what are the asset base of NTPC Green, the renewable portfolio right now. Our colleague Vivek was telling us that by 2030 they want to add about 60 gigawatts. So by 2032 or so, maybe a little later than that, the thermal renewable mix for NTPC as a whole, the group as a whole, should be close to 50-50. I think thermal capacity is also going up. So just some numbers to it. And also explain that point. You said that even after listing, they'll have to keep raising money.
Surely. So the first point on the capacity side, so right now, if you look at NTPC's mix, so out of 76 gigawatts that they have, only 3 gigawatts or so is capacity. But the plan is to take this 3 gigawatts up to about 20 gigawatts by end of FY27, and then on to 60 gigawatts by FY32. So that's the focus the company has on the renewable front. And thermal also, they would be adding in our estimates about 2.5 gigawatts every year. So we would be close to 50-50 mix in the overall portfolio by 2032. That's the aspiration the company has. Till now on the renewable front, the execution has been a bit slow, but we see that picking up from this year, especially looking at the capital work in progress, which is already there in the renewable arm.
Nikhil, you mentioned 4 to 7 times book as the going valuation. But these are the traditional generators on the coal side, or these are valuations you're speaking of on the renewable side?
So these are traditional generators, but for most utilities in India, the incremental focus is renewable. So the excitement which we see in utilities, A, is power demand itself, B, consequences of renewables, which is like evening shortages, and third, the big energy transition story, which is a big focus of the government, which you would have heard a lot about in the RE Invest over the last few days as well. So as India plans to take renewable capacity from 200 to 500 by 2030, so that is a big part of the excitement in private utilities right now.
I wanted your call on NTPC, whether or not this happens as well, because there was another news piece that came in where the board has approved 2 proposals worth 21,000 for thermal power projects as well. So if you had to look at NTPC on an SOTP basis, with this development coming in, what would your fair value and SOTP be here?
Yeah, so the valuation we have for NTPC is about 440 rupees per share. A larger chunk of that is the core business. That's a primary part of that, and renewables is a smaller part of that. Can there be more upside to that valuation? Yes, remains to be seen how this renewable listing is taken. Because even if you look at NTPC, the parent on an earnings multiple basis, it is 16 times earning. So it's higher than historical averages. But if you compare to global peers, most utilities globally also trade at a similar earning multiple of about 15, 16 times. So it's compared to the larger market, which is trading significantly premium to global peers, NTPC valuations are still not very rich, I would say, right now. Yeah.
So, Nikhil, to sort of sum things up, and I think the market typically loves to draw parallels, right? And if you're looking at a pure play renewable business, power business, then I think people will quickly look back at Suzlon and the remarkable turnaround that company managed to achieve. I don't know if that's the right sort of analysis or the right peer to consider, but the kind of value creation Suzlon went on, and it also was a turnaround story, so you have to take that as well. But in general, what would you expect from the renewables business? And the other point you raised was very, very valid. The need for cash, because you simply can't draw from the cash of the parent once you're a separate listed entity. So what is the kind of debt profile you would expect this renewables business to have? And would NTPC Green, say, be able to enjoy anything close to what Suzlon did in terms of the market love and the value unlocking and the wealth creation that we saw?
Right. So firstly, in terms of the second point, which is the cash infusion that would be needed, why do we say that? See, there are many examples of separate renewable listings in Europe as well. So 4 companies did that. And all 4 had the same challenge. They had to keep raising equity because renewable by nature, the renewable operating plants don't throw enough cash in the initial years. So if you need to do a lot of capex, you have to keep raising funds. So hence the need to raise cash. Debt equity ratio is typically 75-25 for the renewable plant. Maybe 80-20 if you want to stretch it a bit. So that is the kind of capital mix you would expect the NTPC Green also to have. They are very close to that right now. Their book size, what we saw, is about 29,000 crores, in which 6,500 crores is the equity part right now in the NTPC Green arm. To the earlier point you mentioned, is Suzlon a good proxy? I won't say Suzlon is a good proxy because they're an equipment player. But it does reflect the broader interest in the renewable theme. If you look at IREDA, the renewable lender, you look at Premier Energy, is a solar panel manufacturer, there's been a massive interest in the renewable theme. So from that thematic perspective, without a doubt, and even from our discussions with investors in Europe, there's a big interest for large opportunities in renewable, which NTPC Green could give.
Nikhil, 30-second response. We were speaking to one of the consultants earlier, and they said, asking which part of the value chain will yield most gains for investors from here. And he said, well, solar cells, because, there is enough module capacity. There is, of course, you go the utility way, that is a different thing. But solar cell capacity, according to him, needs to go up, 10x, 15x over the next many years. And now, of course, there is import duty protection, etc. Would you agree?
The solar value chain, the equipment side, if you ask me, the value chain is modules, cells, wafers, and then polysilicon. That's the backward part of the value chain. The modules is the easiest part, which is largely an assembly job. So typically, you won't ascribe a lot of value to it. Cells is a bit more complex, and the cell manufacturing capacity in India is right now about 10 gigawatts. The requirement is upwards of 40-50 gigawatts of total capacity in a few years' time. So there is opportunity in cells to add more. And the further backward you go, the more complex it gets, more difficult it gets. So the more backward you go in the value chain is what we prefer to play in the solar value chain. And there are opportunities which will emerge. At least the 2 large players, Reliance, for example, is looking to build a full value chain, right from polysilicon to modules on that front.
Okay.
Yeah.
Absolutely. Nikhil, we'll leave it there and we'll sort of invite you back. It's a sort of ongoing theme and lots to talk about here, lots to discuss. Thank you for joining us.
And Prashant, really interesting, right? The last point that you asked him what he made, that typically in things like commodities, forward integration is what gets you more value-added products, right? But here in the solar chain, it's backward integration, which is where the more complex business is.
It's like electronics, right? Yeah. So, for example, iPhone assembly is a very low-margin business, but sort of making things from scratch, that's where the money is. We'll take actually, we'll get you 9-10 calls now. So, Mitesh is with us. Mitesh, what do you have?
I'll go with a buy on Oberoi Realty for targets of 1890.
Okay, Oberoi Realty. And what else, Mitesh? Sorry?
Yeah, that's the 9-10 call.
Okay. Just a quick word, if you will, on IIFL, Mitesh. Where can it sort of go up to? It's starting with a 10% pop in the pre-open.
I've not been tracking the stock, Prashant, but all the entire broking and the financial names have done well. IIFL, I think, close above 520, which is what I think it will happen today, should see the stock head towards levels of around 600. So I think that could be a working target.
All right, fair enough. Mitesh, thank you very much for that. Let's shine the spotlight on telecom. Hormuz is here with that. Hormuz.
Vodafone Idea is the stock in the spotlight, right? Nomura has come out with an upgrade to a buy recommendation, but its price target remains the same. It says that this recent sharp correction that we saw yesterday, along with a strong industry outlook, is an opportunity to buy the stock right now. However, Goldman Sachs is still on the bearish side. It says that the Supreme Court verdict has increased the possibility of one out of the two events. Is that one being that there might either be larger or more frequent tariff hikes from Vodafone Idea, or B, it might result in market share gains for both Jio and for Bharti Airtel. And therefore, in the absence of any government support, it expects Vodafone Idea's free cash flow to remain negative until FY31. The UBS is also saying that it does not rule out an equity conversion or a deferral for Vodafone Idea in the absence of a complete waiver from the government. So that remains a possibility. CLSA is factoring in an AGR risk of 7 rupees a share for Vodafone Idea, and it is saying that in the absence of an AGR relief, it can face financial crisis in the second half of FY26 or in FY27. So mixed views coming in on Vodafone Idea. We'll see how the stock moves today.
All right, Hormuz, thank you very much for that. Just a couple of seconds to go for the market open, and we'll have the first rate starting to come up. We'll look at the indices as always, and then we'll get down to stocks. What do we have? Sensex is up 0.5%, so 83,600. The Nifty is starting with the 0.5% gain, 25,540. You got the Nifty Bank, which is up 0.5%, 53,275. And the sort of mid-cap index is up 0.5% as well. Actually, for the broader market holding on and doing a little bit better as compared to the last few days, perhaps, is more important than what the Nifty does on a day-on-day basis, because that's where portfolios will sort of feel the heat or the pleasure one way or the other. Yesterday was a case in point. Frontline indices did nothing, but broader markets were seeing some selling pressure. So heat map on your screen, I think I can't see red yet. As you'll, the Nifty heat map, the number of stocks, I think all 50 are higher. So that's a good start. 100 now on the Nifty, 25, 530 is where we are starting. Okay, there's one stock which is down, which is Tata Motors. Surabhi.
Yeah, so Tata Motors is the red one. The other interesting thing to watch is whether banks can continue that strong momentum or not, because right now, the start for the Bank Nifty is a step behind the Nifty. Bank Nifty is up about 0.3%. And those gains are fizzling off a little bit. So ICICI, Kotak, they're not doing too much. And that's been the problem with banks. No consistent build on the big bank trade. Let's see how that plays out. Anyway, let's talk about what's up. Commodities and anything that's global facing, because even the commodity markets are rejoicing that rate cut finally. JSW Steel, Tata Steel, Hindalco, ONGC, Coal India. So that's where the gains are this Friday morning. M&M is having a good pop, 1.5% on the upside. It's a bit of an outlier. It's probably the best performing auto stock on the Nifty right now. Then there's some buying on names like Wipro and HCL Tech. So some of the tech names coming through. Some buying on consumer names like Britannia and Nestle. They're in the mix, so not too bad. Infosys, SBI. Actually, everything else is mildly higher. The only thing to watch is whether banks can retain their mojo or not, because some of them are already slipping. Axis is already in the negative. Kotak is now flashing a little bit of red. And then there's Tata Motors, which is the other stock that's weak. But otherwise, quite okay. 100 points up on the Nifty right now.
Well, the stock of the morning definitely has to be IIFL Finance, up 9% at the open itself, as the RBI has lifted the restrictions imposed on their gold loan business. So that's higher. And we also have a decent traction on all the other IIFL, listed companies. So we have IIFL Securities, just a sentiment rub-off out there. But what's also important is that this up move on IIFL Finance has caused a bit of a down move on other gold financiers. So Muthoot Finance is actually among the top F&O losers today. Remember when the RBI had put, the restriction on IIFL first, Muthoot Finance and Manappuram were the ones which actually saw most amount of gains, hoping to consolidate their market share out here. But now that, competition is back in the fray, these stocks are under a wee bit of pressure. We're also seeing some traction on Balrampur Chini. That's a stock that has come out of F&O ban. A couple of these metal stocks doing well, JSPL, etc. as well. Vodafone Idea this morning, there was a slightly positive-ish sort of note coming in. So as a result of which that stock seeing some bit of an up move after a big decline that we saw yesterday as well. Mahanagar Gas is seeing some bit of profit taking, and we have ITD cementation, which again is gaining on huge volumes. Reports of some sort of deal, news reports. We've reported it here on CNBC-TV18 as well, so we'll keep an eye out on that one. You know, ITD cementation is a stock which is seeing a big move. ITD cementation is the one that should come up.
There's also Indostar, Mangalam. I don't know if you mentioned that. 7% higher because they've sold their home finance business to a PE firm, and I think the money they're getting for it is about 1,700 crores. That's a substantial cash that's coming in to Indostar. 7% up there.
Yeah, absolutely. I mean, the stock's not done anything at all for a long time, so there is that sort of, bit as well. So there's room there. Well, IIFL is the biggest, by far the biggest volume-led gainer with a 9% pop. It's holding. I think newspaper report on ITD is that Adani Cement is the front runner now, and the deal announcement is expected very fast, very soon. So that's why this one is excited. Remember that 46% stake in which the promoters are looking to sell. We'd reported that a player like KEC was interested as well. That's the big mover today. 1.6 million shares coming through. So we'll see. JSW Steel is up 3%. It's got very large volumes. Reliance Power continues to do well, 4.5 higher, 36. Hudco is up 2.5. You'll hear from the management a little later here on the show. 236 on Hudco. Balrampur Chini is up 2.5%. There is Interarc, that is a building products company, 7.5% high. Recent listing 1270. Lodha is up 2.5. Mankind is up 4%. JM Financial is up 2.5. Hindustan Zinc is up 2%. EID Parry is up 2. CMS Info is up 3.6. So there is, I mean, right out of the gates, a lot of action and a lot of sort of movement, both mostly on the upside. I mean, if you want to look at what is down, Muthoot is down the most, 2.5% in terms of backed by volumes. Godfrey Phillips continues to take a bit of a pullback. It's at about 76.20, and there is GET&D, which is down about 3.5%. It's got outsized volumes as we start this morning. By the way, Nifty is down 50 from the highs of the day, and that'll come up on your screen. We were up 100, and very quickly there is a bit of a pullback, which has emerged straight up on your screen. So 25,469 is where we find ourselves at. All right, Devina Mehra is with us. She's a market master of the day, founder, chairperson, and MD at First Global. Devina, it's a pleasure. Thank you very much for joining us here on CNBC-TV18. Prashant here. So let's just start with the big talking point, which is the sort of global easing cycle, which has been kicked off by the Fed with an aggressive 50 basis point cut. What does it mean eventually? Not actually, eventually, probably the wrong choice of word because it's kind of very long term. But what does it mean in the medium term for flows into emerging markets like India? Because this has been a domestic equity story. Local investors have pumped and pumped and pumped $4 billion a month into mutual funds now, whereas foreigners have been reluctant. Will that change as rates start to come off in the Western world?
Good morning, Prashant, and good morning to your viewers also. So analysis of the Fed 50 basis points cut is different because they actually just said that if we had known the data earlier, we might have cut 25 basis points in July itself. So it's really a combination of the two cuts we should have done. So it doesn't necessarily mean that they will cut it all the way down to where they started from. That's unlikely because, if I was the Fed, I'd like to keep some powder dry that in case the economy needs it. As of now, it doesn't look that the U.S. economy particularly needs a boost. So that's as far as the U.S. is concerned. As far as the liquidity into emerging markets or to India is that part is concerned, as I have said plenty of times, I think must have said on your show also multiple times, that if you're trying to project how much FPI or FII money will come in, but and obviously the assumption behind that is that the more money comes in, the market will go up. If money goes out, market goes down, or at least there's a correlation. But if you actually look at the data, there has been historically no correlation. And that is even at a time when the domestic flows were not of this kind. In fact, the domestic mutual fund industry did not exist. So FII money started to come into India around 1994. And 1994 to 2003 has been the only 9-year period in the sensex history where the net return was zero. So it is as uncorrelated as that. I mean, even month to month, if you see, even at a time, as I said, when the mutual fund industry did not exist in any meaningful fashion at all, there was no correlation. So I think it's a fool's errand to really try to forecast FII flows and from there try to gauge where the market would go. That's what the data says.
Yeah, no, I absolutely take the point, Devina. But the only thing is that, so yeah, I mean, we can never tell, never predict. We're only wiser in hindsight. That point is taken, Devina. But the point is, can locals continue to pump in this kind of money? Will it continue? Is it a secular theme? And if not, I mean, in anticipation that flows will remain so strong, supply is also building up on the other side, right? Big supply. So right. I'm trying to understand whether is it going to be evenly matched? Will demand overwhelm supply? Because you go back, you get the 90s example. I think we've had bull markets punctured by too much supply. I think that 94 instance was, I think is a case in point. So just your thoughts.
So, I mean, that was not just that there was too much supply of paper, but, that's a different question altogether. In fact, I wrote recently about the IPO market, and that definitely looks to be in whatever you should call it, frothy or bubble territory. There's no doubt the SEBI data, which actually is only up to December last year, already showed that more than half the people who get an allotment sell in the first week. And if the issue lists at a premium to the IPO price, something like 67% of the people sell. I'm sure the proportions are even higher now. So it's not become a game where you're not investing in the company because you think the valuation is right. You are investing because of what is called in finance the greater fool theory, that you will find a greater fool who will buy it at an even higher price from you. So that's always dangerous because, then everybody thinks that they will, even people who think, let's say an IPO is too highly priced, they will still go in thinking this is a lottery. If I win it, I will get out at a profit. But that sort of thing always ends badly because everyone thinks they will get out ahead of the mob, ahead of the dumb money, as they say. But till you find you are the dumb money. And I'd given the example of Isaac Newton, the same scientist all of us heard of in school. And in spite of being not just a great scientist, he was also a finance person. He was a master of the Royal Mint in England. And yet he lost almost all his fortune in a bubble called the South Sea Company bubble. And he saw that this was overpriced. At one stage, he got out of the stock and then again, he bought it at a higher price and then rode it all the way down. So, so there are areas in the market which are frothy and IPOs are one. The other rule of thumb to identify frothy areas is to see where the thematic funds and schemes are getting launched.
Oh, let's not even get started there. Devina, hi, morning, Surabhi here. By the way, your green, the green of your attire is, I think, reflecting the mood of the market. It's a bright shade of green across global markets. We've got rate cuts pouring in. So, but I guess that's the thing with momentum, right? And not just thematic funds. Now you have momentum funds launched by so many AMCs, and it's just the nature and the mood of the market that we're in. But yeah, who's to say where this goes? Till the going is good, it's good. And for a lot of people who came in after COVID, I think it's 3 years of an up market, and now you get into a rate cut cycle and everybody's still saying that it's still looking good. So anyway, the point is, let's talk about...
talked of people coming late. So that same SEBI study also said that I think 85% of the IPO allotments are to accounts which have opened after 2016 and more than 50% are to accounts which have opened post-COVID. So they have not seen the cycle.
No, they haven't seen the cycle, and now when it turns, it turns. But let's talk about what to do here and now. And what we're seeing in the market is a little bit of at least change in positioning, some sector rotation. That whole idea of buy any PSU stock and it'll be a doubler, I think that's coming under a bit of question now. So what is it that you're advising? Are you changing anything in your portfolios in terms of themes like CapEx and industrials and manufacturing? Do you think it's time to get into banks? But the bank trade really has been a bit of a non-starter. I mean, we're all waiting for that major secular up move in bank stocks, but it hasn't happened so far.
Okay, so in terms of the sector, of course, we will be doing our quarterly rebalance in something like 3 weeks' time. So I might have slightly some changes there. But as where we stand today and based on what we have done up until now, our biggest overweights would be things like pharma, auto components. We've gone somewhat overweight IT in the last rebalance. Cap goods and industrial machinery, most people discovered in 2023. We have been overweight for almost 3 years. So we went overweight in October 21. So, I mean, now we've been cutting. So we've been, because many of those stocks did so well. So, we are now, we've been marginally overweight, but we're now close to market weight. And as far as, in general, what is to be done? First of all, many of the viewers would have made great money in some small cap, some micro cap. All those things you book profits and put it into a steadier portfolio. So if you want a one-line advice, that would be it. Banks, I mean, while they've underperformed a lot, if you look at the longer term, maybe they may not underperform that much, but that's not a sector that's a thumping buy, especially with all the credit concerns also. That's the part which you don't know, where that credit cycle to retail loans in particular, where that cycle will turn. And as people tell me that you repeat this in most interviews, I'm a nervous investor in banks and lenders. And that's because you don't know where the negative surprises hide in that sector. So that's definitely not a sector that I'm recommending as a switch to. I told you what looks good. I mean, we're watching FMCG. That's one place where little by little, weight has been going up. And I think it might be a positive cycle for FMCG earnings because the cost side of the food-related costs are going down, oil-related costs are going down, which are the main inputs for the FMCG pack.
All right, take your point on the sectors which you're overweight on and building positions on some which you are nervous on as well. But, like we were talking about, how a lot of the investors currently haven't perhaps seen a cycle itself. So, from your wisdom, what, according to you, would be, the first signs of worry? What would be the, the proverbial canaries in the coal mines? Largely because everyone knows that some parts of the market are frothy. Everyone knows that some parts of the market are, showing signs of value. But every time it turns, people are still surprised. I mean, case in point, everyone's surprised by the decline that we've seen in a lot of these PSU stocks. Everyone's surprised by the fact that some of the large caps are actually doing well. Everyone was surprised by the decline that we saw in the mid-cap index yesterday as well. But for the last 2 months or so, everyone's been calling out the top at the mid-cap end of things. So while everyone likes to call out, not a lot of people act on it. So what would your advice to them be, and what would be the first signs of, worry emanating?
So normally, I mean, the risk is what you don't foresee. So the trigger might be something you don't foresee sitting here. That's the whole point. But I'm not surprised that the large caps are going up or so on. So I mean, that's a bet that we took a few quarters ago to be away from the small cap and the really small cap and the sub 5,000 crore market cap, small cap. And even though we knew that we could see the momentum, we could see that in the short term it would hurt our performance, but you should never as I said, bet on getting out ahead of the crowd. So you cannot wait for a trigger, and you will not know in advance what the trigger would be. But just let me give you a few statistics on small cap. So the small cap index in 2008-9 fell nearly 80%. 78% to be exact. So, I mean, if you haven't forgotten your school maths, if something falls 80%, it goes up 5-fold, you are still at zero. So that increase came after 8 years. In 2016, that high was crossed, but that's a theoretical statement because the index was a completely different index from what it was in 2008. So many of the stocks which fell in 2008 never came back. So that's the danger in small cap, micro cap, that stocks just disappear into the blue yonder. Many more stocks have been listed in the Indian markets than currently trade now. So, less than 50% of them actively trade. So, and again, there was a mad bull market from that 2016 to 18, about 1.5 years. Again, the small cap index fell nearly 2/3. And now a lot of the micro cap managers who say that 50% compounding for 2 years or 3 years, remember something falls 80%, it compounds 50% for 3 years, you're still down 33%. So those are the numbers to remember. If you haven't lived through the cycles, as they say, learn from your mistakes, but the smarter person who is the one who learns from the mistakes of others and doesn't forget history.
All right, doesn't forget history. But, hanging there on a lighter note, we're getting some visuals coming in from the Apple store in Mumbai out here. It's September 20th, which means that the Apple iPhone 16, 16 Plus and all, would be available for sale. And as it is around the world, people queue up for those phones as well. These are not cheap phones, 90,000 rupees to 1,30,000 a pop. And there are a bunch of people queuing up for that as well. Devina, people who would have made profits in some of these IPOs are perhaps, very excited to take those profits out and buy iPhones, iPhone 16s. You are also investing in global stocks. So what are your thoughts on Apple here? Just out of curiosity, I want to ask, and will you be buying the iPhone 16?
I haven't bought a single iPhone. I'm still on Android, so I'm the wrong person.
Did you buy the Apple stock?
So, yeah, we have some exposure, but less than market weight. So we would have something, but not
then you're not a true loyalist. You're using an Android and buying an Apple stock.
No, but that's what I'm saying. I'm not even at market weight on Apple. In fact, we didn't hold Apple in the middle. Now I think we have a small holding. But yeah, so I'm happy with Android. I'm happy with the Google voice to text in particular. So I wrote my entire book on my phone. So are
you tracking the developments at Nike? New leadership emerging out there as well. The stock has been in the doldrums. Stock is up around 8%.
Whenever the stocks are in the doldrums, you keep trying out new CEOs. Happened with Starbucks also. And so, that's the way US works. So, let's see what happens with the change.
Right. Prashant, you're buying the iPhone 16?
I'm using my latest iPhone 13.
iPhone 13. That's not too bad. That's not too bad.
Before this, I was using the latest iPhone 6. So I
guess the iPhone 26 is what you will go for.
About 5 generations behind. Devina, great speaking with you. Thank you very much for your time. Appreciate it here on CNBC-TV18 as always. Wonderful. Thank you. So that's Devina Mehra with perspective on markets and of course a little bit on Apple versus Android as well. 50 points higher, which means we're about 50 points off the day's high. Hoodco is the next company that we're speaking with. The stock's up more than 80% in this year. That's 2024. And of course, the details of the PMAY2 will be closely watched by companies like Hoodco and what this would mean. Sanjay Kulshetra is CMD at the company. He's with us to take some questions. Mr. Kulshetra, thank you for joining us. Good morning, sir. Prashant this side. Could you sort of parse through the details for this PMAY2 and what does this mean? Step by step, if you can just look at it and compare it to where it was earlier, the first part of the scheme and how this differs. How is it better? How is it worse? And what does it mean for Hoodco? Go on, sir.
Thank you, Prashant. Good morning. I think PMAY is the landmark decision of the Government of India, and government has came out with PMAY rural as well as urban, and the guidelines are also out, and a lot of demand is there for the PMAY. So there are 2 crore households for the rural and 1 crore for the urban. So all these kind of opportunity which are coming out of the PMAY, which is actually for the affordable housing. The program is amounting from 10 lakh crores and 3 lakh crores, so total 13 lakh crores potential capital expenditure will be there in the entire country. So 3 crores households, 13 lakh crores kind of money. It gives a good potential as a lender to the company like Hoodco, which is primarily into the housing and infrastructure development financing. So this is actually a step forward from the PMAY 1.0 because government has came out with certain monitoring framework also to assure and ascertain that a time-bound implementation of the program will come. Then there was a latent demand in the market, and there is a commitment of the government that everybody should have, especially in the middle class, they should have a house and a roof on their head. So they had came out with the interest subsidy schemes, as well as affordable housing on rent also. So all these kind of measures the government is taking is towards that every Indian should have one house on their top. And if I talk about the house, and house is the epicenter of the infrastructure.
Yeah, no, absolutely, absolutely. Just to get into the specific details, I mean, there was some talk at the margin when the scheme was under formulation that there will be an interest rate cap. So, you know, you borrow from the NHB with a spread. I mean, you know, you can only lend at a certain, up to a certain rate. That is not part of this, right?
No, it is not part of this. It will be a totally commercial call by the HUDCO to extend the loans for the counterpart funding, which is we envisaging that it will be more than 1 lakh crores. But the conservative figures stand at 1 lakh crores. And at the same time, we are trying to tap the resources to generate some low-cost funding, maybe from the Japanese market or the USD, so that, or the multilateral banks. And we are talking with the multilateral banks for back-to-back kind of funding. We want that the concept of the affordable housing, which is being launched by the government, should be supported by the HUDCO also. And that's why we are searching and tapping all the resources wherever the affordable rates are available.
Mr. Kulshestra, just to get the number right, you mentioned 1 lakh crore. Is that the amount you're looking to disburse under PMAY 2?
Yeah. Under PMAY, we had already done more than 43,000 crores. This time, it will be very conservative to go with 1 lakh crores kind of a disbursement, maybe in 3 to 4 years of the time.
Okay, fair enough. So that's by how much you could grow, I mean, and what it will add to your overall disbursements that you do this year. Let's talk about the kind of yield, the kind of profitability that this sort of lending, can bring to you, because the understanding is that, apparently, HUDCO is also the nodal agency for consultancy work and all kind of technical studies around PMAY. So does that how does that impact the yield? Does that give you any sort of consultancy fee? Just trying to understand how profitable this business can be for you.
I think this is a good profitable kind of venture for the company. Our yields will be around 9%. And the assets will be much more secured. So yield will not be a problem because states around 9%, they are ready to pay at 9%. Presently also we are lending at around 9% or 9.09%. So yield will be in the range of 9 to 9.1 or 9.2. So that will not be a matter of fact here. But at the same time, government has given us the responsibility for the appraisals and the desk appraisal of these schemes. This will rather gives us a understanding and the potential to understand what kind of demand, what kind of issues are coming of the from the PMAY in state to state basis. Because our presence is there in every state, our regional offices work from there. So our infrastructure supports these kind of concepts to work with the state government, to come towards the central government and work as a tandem between both the governments.
Sure, sir, just to get the timeline right, this disbursal of 1 lakh crores, it happens over how many years? What are you projecting? Because I think the original guidance was that your book will grow by 25%, you'll do 35,000 crores of disbursement. I'm guessing that did not factor in PMAY 2. Just tell us the timelines and what is the guidance now for this year?
So your figures are very correct. In the first quarter, we had already done plus 12,000 crores and we are on the right path to achieve 35,000 crores. And this we had envisaged when the PMAY was not there. So now since the PMAY is there and we are talking with all the states and the stakeholders that what kind of disbursements they are looking at, and I'm sure, pretty sure that with the kind of push and the need, in the fourth quarter the disbursement under PMAY will start. But at this point of time, I may not be capitalizing those amounts. But yes, we will be revising our target beyond 35,000 crores after November or after December, looking at the status of the scheme.
How much higher can you revise it by? I mean, looking at the status of the scheme, is there a broad expectation here? 35,000 crores turns into, say, increase by, say, 5,000, 10,000, 15,000 crores?
I am expecting at least 10,000 should start coming because states are already prepared with their DPRs. So I am expecting that the bidding and all these tender effects will come forward.
So there could be an upside risk by 10,000 crore to your current target of 35,000 crores. I wanted, a little more color on your liability side of things. Just wanted to know what proportion of your funding is currently linked to benchmark rates. Now with the US having cut interest rates, there would be, expectation for the RBI to act as well. How will all of that impact your, margins, the cost of funds?
I think this is a very positive story for the infrastructure funding in the country, as the Fed has already cut the 50 basis point, and we are expecting the phenomena to be continued in the Indian markets also. Since our commitment is to fund the infrastructure at a sustainable costing, and we want that the viable and the sustainable infrastructure should be created for Viksit Bharat. And that is the aim and objective of the government, and we are following the aim and objective of the government. At the same time, we are continuously trying. You may have seen that during past year, we had borrowed around 1 billion USD from the international market, and which has cut down our cost prominently. So during last quarter, our cost was just slightly less than the 7%. So if the USD Fed is reduced by 50 basis point, and another 50 basis point is also under discussion. So we may be tapping this resource of USD borrowing in the last quarter after looking at the rate cuts, further rate cuts. So it will give us an opportunity. It will give us another resource to tap the funds.
So in that case, if you could give us a sense of what your NIMs could be this year and the next year, and also your ROE and ROA targets for this year and the medium term.
So our loan book, as we had already discussed, and I think it is in the public domain, that by next fiscal, by FY26, our loan book or AUM will be at 1.5 lakh crores, which is now at 1 lakh crores. We had grown by 30% during last on a year-to-year basis. Regarding yield, it will be in the range of 9.2 or 9.15 to 9.2. It will remain constant. And regarding the spreads, maybe in the range of 2%, 1.9 to 2%, we will be comfortably maintaining that spread. And regarding NIM also, I think 3.5% will be the absolute figures that we will be maintaining. And
ROE and ROA.
Last question.
ROE and ROA.
Regarding ROE, we had improved from 11% to now we are at around 12.7%. And next year we are targeting it will be plus 13, and we will be settling in next year by 14% of the ROE. And regarding ROA, it is 2.5%, which is in line with the market other peer companies. So we will be maintaining 2.5, 2.55 kind of ROA and around 14% of the ROE.
Okay, all right, Mr. Kulshrestha, we'll leave it over there. Thank you very much for giving us a lot of the details on how PMAY 2.0 is going to shape up the fortunes of the company. By the way, as we take the break, check out the Indian market. We're once again underperforming, and the market is cooling off quite a bit. Though Asia is, retaining a bulk of the gain, but the Nifty just 40 points up, a little drift lower. Bank Nifty is completely cooled off. It's actually mid-caps which are saving the day today. The mid-cap index is still retaining about a 0.5% move, but otherwise, the opening enthusiasm is getting sold into. Let's take that break, come back on the other side, and then we will discuss telecom full throttle. Balaji Subramaniam of IIFL Securities, as well as telecom expert Prashant Singhal, join in to weigh in on what yesterday's Supreme Court decision means for the overall sector now that companies do not get any AGR relief. Welcome back. So telecom is the big story that we're talking about as the impact continues to flow through. Let's pull up the stocks again. When yesterday it was a complete slam dunk on Vodafone Idea and Indus Towers. Both stocks fell quite a bit. Let's see, the rates this morning. There you go. Absolutely flat, and a lot of different sort of sides to the story. Some brokers are calling for Vodafone to go down to 2.5 rupees, but there's Nomura which says that probably all the uncertainty is over and done, so the stock can actually, the target price is still 15 rupees. So the debate is really a fierce one, and it continues to rage. Let's take it forward then with the two experts that we have with us on the show. Balaji Subramaniam of IIFL Securities, as well as Prashant Singhal is with us. Gentlemen, thanks very much for joining in. Balaji, I was listening to your views even yesterday when the ruling immediately had come through last afternoon. Now, what's the sense now that, the dust has settled on this? First of all, where does this leave Vodafone Idea? I mean, are we looking at a bit of a possible end of the road? Or do you think they can actually manage to raise money somehow, debt and equity, pay off these dues, continue to expand and stay afloat?
Good morning. Thanks for having me on the show. If you look at Vodafone's revival plan or the recovery plan, it had a number of elements to it. One was the fundraise, which is both equity and debt. The other one was the tariff hike. The third one was the relief on the AGR case. So as far as the first is concerned, which is the fundraise part, they are halfway through, the sense that they have managed to tie up equity. They were in discussion with banks and other financial institutions for debt, which is still work in progress. Out of the 2 or 3 rounds of tariff hikes, which everyone is broadly expecting, we are done with the first one. So the recovery story was playing out reasonably well. But yesterday, of course, things changed quite a lot with the Supreme Court dismissing the curative petition on the AGR liability. So I think now the key thing to watch out for will be what happens as far as the debt raising plans of Vodafone are concerned. Because if they manage to raise debt despite this setback, I think they should still be broadly okay, in the sense that they will continue with their capex program, which will result in improved 4G coverage and capacity. And with that, they should be able to keep the subscriber loss under check. So as far as I am concerned, the key monitorable would be the progress on the debt raising part.
Okay, so as long as they can raise that debt, the story continues. Got it. Prashant, weighing on this, what do you think? I mean, would you agree that Vodafone can still somehow scrape through? And what would be the key monitorable for you if this is if this market is to continue being a 3-player market?
Yeah. So I mean, I can't comment specifically on Vodafone, but clearly from a sector standpoint, this is going to be, I mean, India would continue to be a 3-player market. I don't think we can, or 3 plus BSNL. So we can't forget BSNL. I think there's a lot of revival which is happening for BSNL as well. As far as the judgment is concerned, clearly there was an expectation, especially, with all the penalties which were being imposed, that there should be some relief which should come in. But and let's hope that there's still something which could happen. There's another petition which is still in the offing. Let's see if a review petition which is there. Let's see what happens there. Having said that, I think the sector is seeing growth now. Tariffs for the first time have gone up north. So this amount is to be paid over a period of the next 5 to 7 years. So the undercurrent or the foundation of the sector is improving, honestly. So I would not say that we could suddenly become a half player of market.
Got it. So yeah, take your point. So you're saying that this will be a 3-player market, and let's see how Vodafone Idea bounces back from what has been a clear disappointment. But Prashant, on the broader issue of tariffs, and you mentioned the hikes that have come through, and I think there's still some chatter around how well the hikes have been digested and whether that's led to some sort of down trading, basically people, let's say going for smaller packs, etc. For the remainder of this year and then on to 2025, are you expecting substantial tariff increases at all? And if yes, what could be the magnitude?
Yeah, so I think India still is, one of the lowest tariffs globally, right? And in the emerging markets as well. So, and obviously India has, or the Indian telecom companies have mastered the art of bringing in efficiency in their operations. Having said that, it needs to, and there is, because of the lower tariffs, which has been there, the entire digital, the entire digital economy has boomed in India. But I think for the telcos to continually invest in infrastructure, whether it's on 5G and then we're talking about 6G, the tariffs have to go up. I don't think we can they can sustain these tariffs which currently are there. I would think that over the next 15 months, we could see another 25% jump on tariffs. And even with the 25% jump on tariff, it's not going to impact, or it's not largely going to impact a large strata of the people who are using the telecom or telecom services. Remember that our ARPU or revenue per user is still, on an average, is still less than 200. So an increase of tariff by 25% on an average adds only 50 rupees per month, which is not really a substantial amount, even for most of us, including any and every strata of the society. So.
Sure. Okay, let me actually bring in Balaji on this point. Balaji, a 25% increase, average increase in tariffs. I don't know, is that something you're penciling in your estimates? And with that, kind of wrap it up, give us an overall view at this point in time. You're saying that this will continue to be a three-player market. From a stock perspective, what would you look at? Which are your picks? And what's the potential upside? I mean, are tariffs the only real key trigger that can drive stock prices higher? Or could there be something else that you're anticipating?
So as far as tariff hikes are concerned, I would, broadly agree with a 20 to 30% kind of tariff increase over the next 18 to 24 months. Of course, the timing of that can be difficult to predict, but, broadly that is where we should be. Let us not forget the fact that at some point in time, there could be an IPO of Jio platforms as well. And in the run up to that, we could see further tariff hikes. On that, I would concur with Prashant largely. And as far as the stock picks are concerned and stock performance is concerned, I think a lot of the tariff hike related positives is built into the stock prices, especially based on how Bharti and Hexacom have moved up. But other than tariffs, some of the other things to also keep in mind is that the telcos have, at least Bharti and Reliance Jio, are largely done with their peak 5G investments. They are, they have adequate spectrum, at least for the next 2-3 years, which means that you will have the operating leverage coming in because of the tariff hikes and the ongoing efficiency improvements. And on the other hand, you will have capex intensity also coming off. So I think we are in for a period where the FCF generation should be quite healthy. So I think, that is also something which will support the stock performance of Bharti and Hexacom going forward.
All right, gentlemen, thank you so much for that insightful discussion. The key takeaway for me was a 20-25% hike in telecom tariffs over the next 18 to 24 months. Let's see how that will be taken by the consumers themselves. But let's talk about the dairy space. Dodla Dairy is the next management on the show. The company aims a higher capacity of milk procurement per day, 20 lakh litres. Animal feed business as well could be one of the big triggers for them. And also, the milk procurement prices have stayed stable. Typically, when that happens, ahead of the festive season, we see increased sales for value-added products and gross margin expansion for the dairy industry as well. As we've seen in the first quarter, the question is whether that sustains or not. Sunil Reddy Dodla, who's the MD of Dodla Dairy, joins in. Thanks a lot, Mr. Dodla, for joining in. That's really the first question. First quarter, we did see a decline in milk procurement prices. Where do they stand at the end of the second quarter? We're looking at a flush season now as well. What's your prognosis for this entire year?
Thank you very much for having me on the show, and good morning to you. I think this year will be a good year. Milk procurement prices have remained stable, and quantity of milk, although the flush season is just coming in, has remained pretty stable. It's not shot up nor has it declined, and it's been maintaining a stable trend. So I think stability is the key here. This year has been a good year and stability has been good, and that is going to be helping a lot in terms of our bottom lines.
Absolute price right now of milk procurement?
No hikes in price, only marginal corrections. Either certain states it's been a little bit on the lower side, certain states it's been on the higher side, but very marginal differentials that have been happening and nothing major. So I think it is going to be a steady state of pricing that will be maintained for the current year.
All right. And what about your current procurement capacity? Earlier, when we spoke, it was closer to 18 lakh litres per day. You were looking to ramp it up to 20 lakh litres. Where does that number stand right now?
Right now, we would be at an overall consolidated basis around 16.5 lakh liters of milk. The 20 lakh liters that we are looking at is taking into consideration another year or year and a half that we have to do, for which we also have to build additional capacities in terms of ghee and powder making, which is the reason why we'll keep balancing it. But we will be able to achieve that within a year or two.
What about value-added products? Because yesterday we spoke with the management of Heritage. They said that their value-added business is growing upwards of 20%. Their fats business is also growing. In the dairy industry itself, they showed the highest amount of gross margin expansion this time during the quarter as well. With stable milk procurement prices, what is your target growth in value-added products this year? Contribution from that as a proportion of sales, and as a result of which, margins for this year?
So basically, value-added products for us will also increase. It's also been driven by increase in all ends of the value-added products, be it ice cream or ghee or other products that have come in. So this year, we will also see a substantial increase in value addition compared to last year. I think at least by 5-7%, we will see an increase in the value-added product, increase in the overall revenue that we are operating on. And also, if you look at profitability, because of stable prices, value-added increase, and the growth that we have seen, we are looking at maintaining, compared to last year margins, current year margins would increase at least in their high teens.
Okay, high teens is what you're expecting. You've also, looked at scaling up your animal feed business. As a proportion of your revenue, where can that number be? Because, I'm looking at the first quarter numbers itself. It's a 10% margin business. You did about 32 crores of revenue. How much can the revenue scale by, and how much can the margin scale by once you get operating leverage here?
So our revenue will almost double from last year to where we are in the current year in terms of revenue. Margin will maintain at 10%. But as a part of our overall share in terms of our revenue, it's still very small. It may be less than 5%. It will be around 4%.
All right. Just a final question before we let you go. On the industry on the whole, on the one hand, you have Amul, which is extremely competitive, doesn't want to cede market share to anyone. At the same time, doesn't have the pressures of profitability or listing as well. So, how do you deal with that big competitor? And then you have the other private players as well, vying for the same theme that everyone else is looking at: higher value-added products, increased procurement, increased distribution, and looking at alternate sources of revenue. So, what's the competitive situation like right now, and your market share aspirations from here?
Basically, I think as we are going forward, we are seeing a lot of consolidation happening in the markets. If you look at it as Amul, yes, is an aggressive player. He has been coming into our markets. He's also come into areas of Hyderabad. They've been here for 4 or 5 years. It's not something new that they've come in. They're doing their bit. We are doing our bit like any other business. All of us are continuing to grow and gain market share. It's becoming a larger game now. So I think in the years forward, we will see a lot more consolidation happening, and a fewer companies emerging, and they'll be the ones that will continue to go forward.
All right. Thank you so much for joining in. You seem to have brought good luck, not just for the dairy industry, but for the markets as well. The Nifty Bank, which was within, touching distance of the record high yesterday, has now gone ahead and hit that record high, 53357.7. So we've crossed past that, doing extremely well for the markets.
Absolutely. And, finally we get there, right? I mean, yesterday was just 4 or 5 points short of it. But this is now looking better. As somebody put it, and we'll have to sort of look at the data. I mean, if names like HDFC Bank, etc., don't start to perform now, I mean, their last couple of years' returns will fall below their FD returns. So, they've got to. And HDFC Bank is up about 0.75%. And Nifty Bank is up about 300 points or so, 0.5%, 0.6% higher. And of course, look at what that's done to the market, right? It just had 30 points there were just 30 points on the Nifty about 15 minutes back. We're up 150, 160. So we're almost basically back at the day's high for the index. Actually, the day's high was made just now. So there's a sharp ramp up which we've seen come through. And, on the index, if I just want to sort of take a look at where this bulk of this is coming from.
It's HDFC Bank, Prashant.
And
all
ICICI
of that is HDFC Bank, ICICI Bank. The banks are doing well. What's also good is that, while the frontline indices are doing extremely well, there hasn't been any let up in the mid-cap end of things as well. Yesterday, by the same time, we had the advanced decline lines come pretty close to each other. And right now, they're maintaining their distance. 1,600 stocks on the advancing side for just about 700 stocks.
So
on the declining
HDFC
side.
Bank, ICICI Bank, between them are adding about 40 points, 40 Nifty points, and the Reliance is adding about 20 index points as well. So we should have that up as well. That is RIL. So these are the three names responsible for about 60 of the 160 that you see on the Nifty right now. We take a break. We're back. Manisha will put the focus on commodities on the other side. Stay tuned. All right, welcome back. 160 on the Nifty is what we have. 25,576 is where we're at. And that's about 0.6% higher. Manisha is here with what's making news and top. Okay, I think what we'll do is we'll go to Manisha in just a bit. Let me quickly get a quick view in from Mitesh, who's with us. Mitesh, good morning again. Bank Nifty finally making a high. What would your trades be?
Yes, Prashant, I think the private sector banks like HDFC, Kotak, I think are clearly driving the bank Nifty higher, and that's propelling the Nifty as well. What is also happening, there's some kind of, short covering bounce is taking place on the IT stock. So we've gone to new highs. The current trade which I have is a buy on Maruti. It's done a good base building over the last few days, is now breaking out. So buy here with a stop at about 12,380. And look for a target of around 12,800 to about 12,900 range. And Pharma is a pack which is showing some signs of profit booking. So I have a conditional or a trigger sell on Aurobindo Pharma. If it starts trading below 1509, take a short with a stop at about 1535 and look for targets of around 1440, 1430.
Okay, all right, got it. Mitesh, thanks very much. You have a good trading day and we'll touch base with you later during the session. Now over to Manisha for all the commodity cues. So Manisha, how's it looking?
Well, I'm looking at precious metals right now, and within that as well, silver finally seems to be coming of age. Overnight, we've seen nearly 3% of gains into this one, and $31 an ounce is back in the international markets there. When you look at the range for 2024, it has been a huge $22 to $32 an ounce. The support comes in on the back of dollar index, which has slipped off its recent highs. And then the markets also have seen support from the run-up in gold, the US Fed rate cut, and the expectation that you would see another 50 basis point rate cut in the next two meetings from the US Fed as well. So when you look at the silver markets as an individual fundamentals as well, this is going to be a fourth year of deficit. The global markets are in deficit in 2024, and also this is the second largest deficit expected in 20 years in this year when it comes to silver. That is where the support's coming in. Silver global deficit, when you look at those numbers as well, has been increasing. 2022 was a record number. Last year was a deficit as well. And for this year, 215 million ounces of silver deficit in the global markets is anticipated. When you look at the silver demand, well, that is anticipated 2% higher as compared to last year. So we're looking at 1.2 billion ounces of demand expectation for this year. When you look at the global silver industrial demand, well, that has been increasing as well. Last year was a record 654 million ounces. This year is a record 710 million ounces of an expectation as well. And with all of that very strong fundamentals where you have a deficit and record demand expectation, the outlook for silver has been quite bright as well. These are the reports that have come in from global banks and brokerages. Citi expecting $35 to $38 an ounce of a price in next 12 months. UBS talks about 34 to 36 by the end of this year itself. And JP Morgan talks about an average of $36 an ounce in 2025. So from 31 currently, the expectation of silver prices going further high is quite high.
All right, so not just gold, but all that glitters can also be silver, as those price targets tell us. Thanks very much for that, Manisha. Well, before we take our break, let's actually put the spotlight on something else that's been really captivating consumers' mind share, and this is the iPhone launch. It's the much anticipated launch of the iPhone 16 that hit Indian stores today, and we have Rachna at one of the Apple stores here in Mumbai, so let's get a sense of the buzz. Rachna, what's going on?
Well, I'm here at the Apple BKC, which is an official Apple store in Mumbai, and long serpentine queues can be seen outside the store. Even now, 2 hours after the store officially opened at around 8 a.m. And before that, also the mall gates opened at around 6 a.m., but there were queues that were seen outside the mall. At around 6 a.m., these people were allowed to come inside and queue outside the store. And one of the first people to enter the store was Mr. Ujjwal Shah, who has come all the way from Ahmedabad, and he's joining us now. Thank you so much, Ujjwal, for joining us. Can you tell us how long did you wait to get inside the store? What did you buy?
I've been waiting for 21 hours. I got a 16 Pro Max and white titanium and also AirPods Max.
Right. So that is exactly what the people outside also are waiting for, the iPhone 16 and the 16 Pro series that is going live today for sale. Now the price range differs. It goes from 80,000 all the way up to over a lakh, almost to 2 lakh rupees. So how much did you pay for your iPhone and what were the specifications that attracted you to come all the way from Ahmedabad here in Mumbai?
I paid somewhat around 160, 165 for this phone. And last year also I did the same thing. I was in the queue for 17 hours and I was the first one to enter the store. So that experience was so good that I was sure that I would be doing it again.
Right. And you were also here when the store opened and Tim Cook was in the city.
Yeah, I was also here for the store opening and I got a chance to click a selfie with Tim Cook. So that excites me so much.
So you are an Apple fan through and through. But what is it that you like about the brand and about the phone that you're looking forward to?
I'm in love with the ecosystem. No other company can build an ecosystem that's similar to Apple, not even close. And Apple has it, like history, it has been the best company for making a lot of products.
Right. Like I was saying, it's been over 2 hours since the store has opened, and even now the queues are coming in quite strong. There are actually 3 different queues outside the store. The store managers are taking them in at around about 40 to 50 people are taken in at once, and then there are these experience desks. This is the iPhone 16 one, where you can see all the colors that the phone is now available in being displayed. Similarly, there is one for iPhone 16 Pro and for the iPads and for the watches.
All right, Rachna, that's, I think the fan mania is real, right? And going by some of the conversations you're having, it hasn't dipped a bit. Year after year, we see, the newer variants get launched and the fans keep coming back. But I don't know, Prashant, 20 hours of a wait for something in a queue. What would you wait for? 20 hours in a queue?
I don't know. But I guess it's just, you could, and we were having this discussion that you can order. Apparently, you can now order, and I think Big Baskets.
Actually, on your phone, right?
Through Big Basket. So at 8 in the morning, apparently, they delivered an
Along
iPhone 16.
with your milk and your eggs.
An iPhone
as well.
But I think it's also perhaps about just the experience of being there and waiting and sort of, getting the, being the first, as that gentleman told Rachna earlier on. So that's iPhone 16 and what's happening here in Mumbai. We'll take a quick break here. On the other side, we bring you excerpts of our conversation with the JP Morgan Brain Trust ahead of their investor conference next week. Stay tuned, that's coming up.